Now, to be honest with you, we are currently living in the best time to ever get rich online. And well, I assume that's why you're watching this video. Now, to some of you who may not know who I am, well, I'm Daniel Ashweze, a 24-year millionaire day trader, and I've been trading close to 5 years. I have generated hundreds of thousands of dollars entirely through trading. And more to that, I've been able to teach thousands of students to make money trading. Now, my purpose of doing this video is to teach you on how to start trading completely from scratch. I'll show you what to do straight from the beginning, and I'll also take you through the intermediate, and lastly, how you can actually be able to make money. And by the way, I'll also show you on how you can start with as less as $50. Now, without any further ado, let's get started with our course. TradingView only allows just a few brokers, and like with MT5, you can link literally any broker. So that's why on the other side, some people decide to say, well, I'll use TradingView for my analysis, but then for my trades, I'll use MT5 because it's much more easier. So same thing off here now. On TradingView, we have your watch list, and then we have the chart off here. You're doing your analysis and all that. Then we have these other features. Honestly, not that important. We have ideas. I personally never use this, but for a beginner, you can always go through, see what other traders think. So off here, you can always scroll, learn a few things in there. So for TradingView, they basically have free and paid packages. So you can decide to either upgrade, but I would say this is all good. As long as you're able to analyze and get a trade, it's all good. More to that, some traders prefer to use the desktop version of it because I would say it's also much easier to use. And let me quickly show you how it looks. Now, on your desktop, it's really easy. Just come over to tradingview.com. So if I just did that, now there we go, same thing again. I'm already logged in, so I wouldn't have to log in again, but all happens here. Now, the most important part here is you're going to come over to products, okay, and then super charts, and then click on that. And there we go. Now, TradingView also offers you a variety of options. You can always decide to customize it. To some traders, you'll probably find, say, green and red candlesticks. Some other person, you'll find black and white. It does depend, actually, from what you wish. In this example, we have green and red. If you wanted to make changes, just come over here, right click or on your computer, and then come over to settings, and yep, you have all these options. So you can decide to change these colors, which is pretty easy. Again, off here, some of the most important tools can be these entry positions. So we have long. Remember, we said when you are going long, you are buying. So that means you could use that, place an entry, and there we go. Also, you placed it off here. Now, the red side is the stop loss. You guys remember what we said? We said our stop loss is going to automatically close a trade if it was going against your initial prediction. And that means if, say, we opened up buys, we expected the price to go up, meaning if in any case it just decided to come back down, we have to set a point. Say we set a stop loss up to this point, that whenever the price hits this area, let our position get closed automatically. Now, to some of us personally, what I do is, I may not use TradingView specifically to place the trades, but I'll use it to get all the figures. In such an example, I do have my stop loss as 1.26403. So I'll get this figure, copy it, and then go paste it over to my MT5, which is honestly really easy. You can always keep TradingView as your tool to analyze, and then MT5 specifically for your entries and then monitoring your positions. And those are the two tools that you specifically need to execute trades. Now, the next one is an economic calendar. So what happens is in trading, we are dealing with currencies, but then currencies are affected by economies. Meaning, if say there's more employment happening, say in the US, that's going to directly affect the dollar. Now, what happens, as in for us traders, all we need is to monitor. We need to know what's happening next, what's happening this week. And by the time of filming this, we have an event called NFP happening on a Friday. So with that, I would know that, look, we have NFP coming up on a Friday, and then I'll be ready to trade that. So we can easily do that by having an economic calendar. And for this instance, we are using fast bull. So just come over here and then type in fast bull. Again, you can easily download the app. I'll put the links just down in the description. Now, once you're off here, you need to have your economic calendar. So just come over here to products and then scroll to economic calendar. There we go. So just like today, do have events on the Canadian dollar. We have events on the dollar. This is at 6 p.m. with the time zone that I'm in, that's the East African. And then we also have events on the Canadian dollar at 5:30. Actually, using the news events to trade is called fundamental analysis. We shall discuss that a bit in detail later on. So typically, again, I can even be able to find events happening tomorrow by just clicking on tomorrow. And if I also wanted, say, for this week, again, same thing. And there we go. So you can scroll through and you have a whole ton of events. Again, your economic calendar is very, very important. And by the more to this, you could even also be able to trade. Then we have charts. Off here, you're interacting with other traders just like yourself. You can see this. But then the most important part, again, is going to be with the news. Typically, once you have the economic calendar, you need to also turn on notifications. Now, this is how important it is. Oh, by the way, with my trading routine, first thing early in the morning is check news events. What could be happening today? Let me give you a scenario. Now, say you analyze and you thought of buying GBP USD, right? And then out of the blue, we have an economic event happening which contradicts what you had planned. Well, what happens is the trade is going to go opposite of your direction. Now, you can only be ready for that by having an economic calendar and having real-time events. And that's why it's really, really important to have this. Now, we typically have many types of charts, but most traders mainly focus on three, and that being the candlestick chart, then we have the bar chart, and then lastly the line chart. This is a bar chart on GBPUSD on the hourly time frame, and this is how it looks. So a bar chart is a combination of just bars, and this is how it looks. We have the green ones and then the blue ones. The green ones in here represent buyers, okay, or bullish, the price is going up, and then the red ones represent sellers or the price going down. Now, a line chart is just a line graph, as how you guys can see. It just shows you how the price is moving. This other side is the price, and then down off here is time, okay? Same thing even with the bar chart. This off here is the price, and then down off here is the time, okay? And then lastly, we have the candlestick chart. Now, a candlestick chart is just a combination of so-called candlesticks, okay? And this is how they look. So in such an example, we have blue ones representing bullish, okay, or buyers, and then we have gray ones representing bearish or sellers. Remember, we mentioned it doesn't matter. You could decide to set this to your colors or preference. An example with what we looked at before, we had green and red, so it doesn't honestly matter. Now, most traders use candlestick charts, and for this course we shall mainly focus on candlestick charts because they're honestly much more easier to read. I mean, if you could compare this with, say, this bar chart or a line graph is also good, but it leaves a lot of information behind. But for candlesticks, you tend to get even the smallest details, and that's why most traders choose to use candlestick charts. And with that, let's understand what a candlestick is honestly. So candlesticks are a technical tool that displays the price movement of an asset over time. So it's just a technical tool. And by the way, as how we shall discuss, we shall look at what we call technical analysis. That's why we decided to use technical, okay? Then a series of candlesticks form a candlestick chart. Now, we basically have two candlesticks. We have a bullish and a bearish candlestick. You guys remember what we said? It's either the price is going up or going down, and that's what these two come in. So we have the bullish and then the bearish, okay? Now, the size of the candlesticks indicate how much momentum is currently in the market. Huge candlesticks indicate more pressure and vice versa. Obviously, for the small ones, will indicate less pressure in the market. Now, we shall see more examples about this, but if say you saw a huge long candlestick, that means we have a lot of momentum at that point with the price. If say it was bullish, it means buyers are pushing the price insanely. And say if it was bearish and it's long and huge, well, that means sellers would be in with a lot of pressure. Now, this is an example of a bullish candlestick. Please, keynote, again, I'll go back and recap that. We said bullish is when the price is going up, meaning it's opening low and then closing higher. I want to show you an example, but it's really important that you guys get this concept even before we get to the charts of here. Now, with such a bullish candlestick, this is how it's going to look. So we have this green part of here and it's called the body, okay? And then we have these green lines or something, those are called wicks, okay? So we have a wick down, we have a wick up, okay? Now, this point down of here is the opening price. So remember, it's bullish or the price is going up. Well, on the other side up, this is the closing price. You guys understand? On the other side for bearish candlestick, I just indicated it in red. We have this being the body, then we have this being the wick, again, same example, and then this being the wick. All right, in this example now the price is going down. You guys understand? Now what happens is this time around we have the opening price on top and then the closing price down. Why? Because we are bearish. That means the value is going down. Now here's a case study on GBPSD on the H4, and this is how it looks. So again, we said we had a series of red ones being bearish or sellers, and then we had bullish ones being green. In such an example, this is typically how it looks. Feels like rocket science, but I believe you guys should now be getting the concept easily. So again, pretty easy. You can see it's just a combination of many candlesticks. Now, it takes time for each candlestick to form, and that's what we call a time frame. Now, I'll give an example. Say in this particular example, we were watching GBPSD on the H4. H4, that means 4 hours. Well, in this example, it means it takes 4 hours for one candlestick to fully form. Okay, well, that means it took 4 hours for this one candlestick to form. Took 4 hours for this one candlestick to form, and each of these. Same thing if say we were watching the chart on say the hourly. That means it takes 1 hour for each candlestick to form. And sometimes you could even be watching your charts on say the M5. I'm going to show you. On the M5, it means it takes 5 minutes for each candlestick to form. Time frames are really important. We shall see why and how we can actually use them when we are trading. Now, an example of here, as we viewed on GU, we've just seen that on your trading view, this is what happens. We have time frames often within this section, so you can always select this. Let me quickly go over to trading view and then I'll show you how it looks. All right, perfect. These are the time frames of here. So we have minutes, we have hours, we also have days, and then there we go, we have ranges. But most importantly, we can always consider these minutes, hours, and then days. Now, in such an example, we are currently on the M30 on GBPSD. That means it's taking 30 minutes for this candlestick to fully form. Now, if we went over to the M5, it means it's going to take us 5 minutes for this one candlestick to fully form. Currently, it's 15:57, meaning the moment it clocks 16:00, we shall have new candlesticks forming on the M5, on the M15, or actually even the M30 and then the H1. Now, time frames play a very big role, and this is what happens. So we have 3 types of traders. We have scalpers, we have day traders, and we have swing traders. Now, scalpers typically hold their positions for a short while. It could be minutes, it could be seconds. Then day traders tend to hold their positions for hours. Could be an hour, 2 or 3, but entirely during day. And then lastly, swing traders. Swing traders tend to hold their positions for a very long time. It could be days, months, or even years. Now, keynote, most traders are day traders. We typically hold our positions entirely during the day, make money, and then close off. Now, how do time frames play a big role in here? So if say you are a swing trader, right? You are looking at holding positions say for a month. Well, what happens is sometimes you might need to look at the charts on bigger time frames. Meaning, in such an example, if say I was a swing trader I'll probably have to come up to say 3 months and see how has GBPSD been looking like on the 3 months chart. And there we go. If I saw this, I would know, oh, it's been bearish. I should probably be looking out for sales. Same thing, if say I was a day trader, I'll give an example. I personally day trade. I will always start off say from the H4, 4 hours. 4 hours is actually huge. I need to see how has the price been behaving in the previous day. And I'll give you an example. So say this is GBPSD and we are currently on the H4. Yep, with what I can see, this is how the price has been behaving, pushing a bit up. This gives me a picture. Now, on the other side, scalpers, remember we say these are holding positions for a few minutes or even seconds. Now sometimes they will even go to say just 1 minute. They want to see how is the price behaving, even on the smallest time frame. Note, whenever you scale down to the smallest time frames, you tend to have the smallest details. And some traders tend to neglect this, but it's really, really important. As we shall see, whenever you are making entries, it's recommendable that you scale down to the smallest time frames. It could be the M5, it could be the M15 to be able to get entries. Now that you've understood the charts and then you now understand time frames, let's go ahead and see candlestick patterns and all that. Now remember what we said, candlesticks being used as a tool to see how the price has been behaving. Candlesticks tend to have different formations, which are honestly important whenever you're looking out for a trade, and we call that candlestick anatomy. So candlesticks have different size bodies. You guys remember we said if it's so huge, there's more momentum. If it's small, there's no momentum. So they tend to have different bodies. When it comes to trading, it's important for us to check out the body formations of these candlesticks. So then candlestick patterns is a series of 1 to 3 candlestick formations. Now we shall see you could have 3 candlesticks all arranged and they will probably tell you something. These are used to study how the price is behaving. Common examples, an engulfing candlestick pattern, just like how the name goes. So in an engulfing candlestick, the new candlestick engulfs the previous formation. And let me show you an example of this. So this is a bullish engulfing pattern. Now what's happening is we had this red candlestick. Remember we said this is for sellers, okay? So this was bearish. And then out of the blue, we have a huge bullish candlestick forming. More to that, it's enclosing the other previous candlestick body. In such an instance, we would say this was a bullish engulfing candlestick. This is it off here. Same thing for a bearish. We initially say had a bullish small candlestick. There we go. And then we have a big bearish candlestick forming, but then more to that, it's even engulfing the entire body from the previous candlestick. Well, that would be called a bearish engulfing candlestick. So whenever you see an engulfing bullish candlestick, it could in some way predict that, okay, look, the price is reversing and it's going to continuously push to the upside. Why? Because we saw this huge bullish candlestick, meaning buyers were getting in hugely. They got in and initially had to oppose the sellers and close above the previous sellers, okay? So in such an instance, you would get in with buys if you're given a right confirmation. Same thing for the bearish. Say out of the blue got such a bearish candlestick. Again, this would mean that sellers are getting in hugely and they're moving the price to the selling direction. So off here, you'd come in with your selling orders with the price pushing down. We also have indecision candlesticks. Well, these indicate that there's an inequality in the market and there's some indecision, okay, on where the price to head next. Typically, what comes in here is at some point we have buyers and sellers, and they're all opposing each other. These guys want to take the price to the upside, but then these guys also want to take the price to the downside. And at some point, you could find the volume is almost equal and they can't decide who is going to take the price at next point. And this is how we should expect a candlestick to look. So a doji, okay, is an example of an indecision candlestick. So you can see it's a very, very tiny body, okay, and then with wicks over the other side. If you saw this form, you need to ask yourself, what was the price initially? So we initially had a downtrend, and then out of the blue, we have this formation. This should bring something to you. I mean, initially we had sellers in control pushing the price down, and then all of a sudden we have this indecision doji, right? maybe buyers are coming in and they're trying to oppose these guys. More often enough, actually, we shall see this is a reversal pattern. Whenever you see this, sometimes we have a reversal coming. So you'll probably see the price changing direction and pushing to the upside. So this is an example on Euro AUD on the H1. H1 is the time frame, and there we go. So we initially had the price pushing to the upside. We actually have many examples of here. This also is a doji. We also have this. It's a good one off here. See the price got off here. We had this indecision, and boom, we had a sell coming through. We also have other examples, again same on Euro AUD H1. This is really brilliant. You guys can see that. Whenever you see that, you need to keep that in mind. Next up, we have a pin bar. Now, a pin bar can also be called a hammer. This is formed when the opening price is almost the same as the closing price, okay? And I'll zoom in, and there we go. So this is how a hammer looks like. It's like a hammer. Crazy. So we initially had the opening price, and then we have the closing price on the other side, and then we have a long wick down. Now that means we initially had sellers and buyers came in to oppose the movement, and perhaps we should expect buyers coming in. And again, it's also much more of a reversal pattern. Now, a shooting star is just the opposite of a hammer, and this is how it looks. Now initially this other time we have our opening price off here, and then our closing price. This time around we are bearish. Now an example, say we initially had the price pushing to the upside, and then we have a shooting star forming. We could expect a downtrend happening. Those are honestly some of the most common candlestick patterns. We also have many. You'll meet most of those on the chart. Remember, please, again, the more the practice, then the better. Now that you've understood candlesticks and how they're formed and how we can always use them to tell how the price is behaving, let's go to our very next topic. Now, technical analysis is the use of previous price data to predict what's happening. Now, I want you guys to take this from me. Whatever happens in the forex market is repetitive. If say the price has initially been in an uptrend and out of the blitz now downtrend, in some way later in the future, such a thing is probably going to happen again. Now, what's happening is we are using the current price data or even the historical price data to predict what's happening in the future. And that's what technical analysis is all about. And with that, let's understand how the price moves, okay? So the forex market mainly moves in three trends. We have the downtrend, the uptrend, and the sideways. And in such an example, we have this over here, this being an uptrend, the price is trending to the upside. Then this one off here, the price is trending to the downside. And then we have this. It's a sideways, the price is just moving in between this area. Now, whenever you see this, expect buyers or buys coming in. Whenever you see a downtrend, expect buyers coming in. And then when you see a sideways, I personally wouldn't recommend trading, because what's happening is the price is playing in between set two levels and it's not breaking either above or below. And you have honestly nothing to do with that. Now, this is an example of an uptrend on the pound and then on the H4. Now, in an uptrend, we have to see a formation of higher highs and higher lows. Now, in such an example, we have these down here as our higher lows. We have higher low, we have a higher low, we have a higher low. Why are we calling them higher lows? Well, these are lows but in an uptrend, so we decide to call them higher lows. Then on the other side, we have higher highs, higher highs, higher highs, higher highs, okay? The higher highs because these are highs in an uptrend, and that means this high is already higher than this, or this high is higher than this, and typically. Now, for you to confirm that it's a clear uptrend, we should always see a formation of new higher highs. We need to see the price continuously breaking the previous higher high to form a new one, to break this one to form a new one. If this was to continue, we would have seen breaking this to form a new one, just as that. And in such an instance, we would confirm and say, look, this is a clear uptrend. So on the other side, in a downtrend, this is what we deal with. So we have a series of lower highs, we have lower highs, we have lower highs, lower highs. Then on the other side, we have lower lows, lower lows, lower lows, lower lows. Again, for you to confirm that it's a downtrend, we need to see a formation of new lower lows and breaking all the previous ones. In such an example, we saw the price breaking this to form this. We saw the price breaking this to form this. We saw the price breaking this to form this. If this was to continue, we would have seen the price breaking even this to form this, come back to form this. So we would say that this is a clear downtrend. Again, remember, in a downtrend, we are looking out for selling opportunities. The price is ranging between two levels. It's not breaking below and it's not breaking above. So you can see price gets here, reacts off, comes back up here. So we have this, we also have this, comes back, reacts off, comes back, reacts off. On the other side, same thing. Now here we have this level here. Price comes, breaks down, comes, breaks down, stuff like that. So this is a sideways market. Now, if you wanted to trade it, though I wouldn't recommend, you would open up buys at this point because the price is pushing to the upside. Then whenever the price comes back to this point, open up sales to capitalize on that. That's typically the three market movements. Now I'll quickly go over the charts and show you real-time examples and how the price is behaving. So let's quickly go over to GBPUSD. I'll delete all the drawings. This is real-time at the moment. We are currently looking at GBPUSD. Now what we are looking out for right now is we can see a downtrend. Why? Because look how the price is behaving. We saw the price break this to form this, okay, break this to form this. On the other side, we see all these levels. We also see this. We can easily confirm that the trend is on if, say, we saw the price again come to break below here, push back, and then continue to the downside. If we can also scroll back and see, there we go, this was also a beautiful downtrend that you guys can see. We had this, we had this, we also had this, we also had this, we also had this. I can also see this other side. We see an uptrend. Again, in an uptrend, remember what we say, we see this, a series of higher highs and the price trending to the upside. We have this area, we have this, we have this. Now what happened is the price started off here. It actually started off here, pushed to form this higher low, come over here to form a higher high, a higher high, a higher high, until we had a reversal. Honestly, a bit easy. You can find as many examples when you are on the charts. After understanding this, we need to understand, is the price going to remain in the same direction forever and ever? I mean, if it was an uptrend, should we expect the price to continuously push to the upside for right now? So I'll go ahead and put the link just down in the description. When you click that link, it will take you to the best trading academy in Africa, and then you'll be able to get access to myself and then 4 other millionaire mentors. Then more to that, you'll have 5 Zoom trading sessions every week, Monday, Wednesdays, Fridays, and then Sundays with myself and these other mentors. But then more to that, you will have access to an exclusive community of winners just like yourself. Now, honestly, in here, there's nothing to lose, but way too much to gain. And for the fact that you watched the video up to this point, this is a true calling for you to get inside. Remember, the moment you're in, there's never looking back. And by the way, remember to like and subscribe. And I'll see you in the next one. Cheers.